Sure. Well, first of all, the stock market typically bottoms 100 days before the end of the recession. We thought the recession would end by the end of June. It actually looks like it probably ended by the end of May, but the stock market fell more than it typically does in a recession. The multiple contracted twice as much. And again, as I said, the timing was perfect. So from an investor perspective, the recession was over on March 23rd. As far as CapEx goes, it does lag a little bit, but what we're seeing that we're very encouraged by is in these regional Fed surveys, Empire State, Philly Fed, Richmond is tomorrow, we'll get Dallas and Kansas City later in the week. They have a 6-month forward capital spending plan indicator. Those have been very good leading indicators of spending on equipment. They've rebounded back to where they were in February. So what we think really happened, and if you look at bottoms up CapEx numbers in the S&P, it didn't fall all that much. It looks like businesses put their plans on hold and they'll reaccelerate in the second half of the year. What's important to keep in mind is we had a software and research and development absolute boom going on in this country. That'll be even accelerated by the whole COVID crisis and work from home Fridays instead of casual Fridays and the like, maybe work from home for everyone. And then you have the equipment piece, which right now, with the prospects for the Republicans looking pretty dim, I could see businesses front end loading that capital spending on equipment in the second half of the year, thinking that they might lose the 100% accelerated depreciation that was part of the Tax Cuts and Jobs Act if the Democrats win and then decide to reverse some of the corporate tax cut from 2018. So I think there's a pretty good argument for reacceleration of equipment investment, and there's a super strong argument for, for intellectual property software research and development.